Good morning and welcome to the panel on trends in international finance. I'm very pleased today to welcome the head of the OECD Export Credits Division, David Drysdale, and the president of the Berne Union, Mikhail Ron, to discuss with you trends in international finance. These leading experts in the field of officially supported export credits and risk insurance have joined me today to discuss their views and insights on current trends in international finance. To start with, I will note that Exim Bank, as many of you know, produces each year its annual competitiveness report to Congress on export credit competition. This year, we published that volume on June 30th, and I hope you've had a chance to look at its contents. We survey global US exporters, foreign buyers, and international lenders, and report on the views that those groups have with respect to Exim Bank's competitiveness. As our report is focused exclusively on US Exim Bank's competitiveness, we thought today that we would turn our attention to the views of these international experts on what other export credit agencies are doing at this time, not only to deal with the impact of COVID-19 on their respective economies, but also to report to us on new products that are being introduced in response to government mandates or demands from the customers in the private sectors. We also are going to zero in on a topic that's top of mind for everybody, and that is climate finance. We here at Exim Bank are very happy now to be working together with our interagency partners on being able to respond to the global remit to do more on climate. We're working with our partners in the OECD and our partners in the Berne Union to be able to put our best foot forward and meet that climate imperative. So now we are going to explore some of the products that other export credit agencies have introduced in response to that global challenge. Additionally, we will look at these issues in context. We cannot just explore the trends looking at today. Today's economic environment is very disrupted, as we all know, not only by the events of COVID-19, but also by the rapid pace of change in each of our institutions and in the private sector. We need to look across the Atlantic, across the Pacific, and across the globe and partner with our friends in the private sector, in the multilateral groups, and try to find solutions for today's global and financing needs. We have tried to explore some of those developments in the annual competitiveness report, and we have brought to you information about areas of growth and lagging areas that require more attention. We hope today that these experts will continue to shed light on some of the trends that we have started to detect with the views that exporters and lenders were able to share with us during our survey, focus group meetings, and other opportunities that we've had to engage one-on-one with them. The insights that we gain here, we also hope can help shape US policies and responses to some of the questions that we face so that together we can all shape better products that will be a solid and sure footing for US exporters. So with that, I will turn it over to Mikhail Ron, First, we will turn it over to David Drysdale, who is the head of the Export Credit Group at the OECD. The OECD, for those in the audience who are not familiar, is the Organization for Economic Cooperation and Development that houses the Export Credit Division and the Export Credit Division collects data and monitors trends on export credit provision of the major OECD export credit providers. This is a subset of the wider export credit industry that includes non-OECD members, private and multilateral organizations that are represented in the Berne Union. So first, we'll turn it to David, who will give us the official OECD view, and then we'll move to Mikhail for a wider perspective from the Berne Union. David, over to you.
Thank you, Isabel, for that introduction, and welcome everyone to the EXIM conference. It's a pleasure to be here. Way of background, I first started in export credits in September 1994 when I joined US EXIM Bank, and have been in the field ever since, working at EXIM and then Treasury and now the OECD. Our work at the OECD is effectively running the regulatory regime on officially supported export credits, where we negotiate the disciplines on export credits, whether they be financing rules or the good governance disciplines of environment, social due diligence, or anti-corruption and debt sustainability. Looking at this last year, and if you go to my first slide, we see that there's been a slight drop in business reported to the OECD. Now, recognize that this is medium long-term business. We do not collect data on short-term business. And the main point here is that our members are reporting granular data. It is transaction specific. So we're building it from the bottom up. And if you see this, you see that in 2020, it's down slightly from 2019 in a context where global trade declined by about 5%. Overall, we found that the big impact, and if you see the various colored in the graph, you see that ships are way down, that's the red, general business is down, and aircraft is actually up. Now, that's an anomaly only in the sense that the last 4 years, there's been virtually no support for Boeing or Airbus from EXIM or the European ECAs for a variety of reasons. So the number is still quite small relative to historic norms for aircraft. When we look at this, we have talked to our members, we've looked at what's going on in the marketplace, and as all of you are aware, there was a huge shock to the system. Effectively, it seized up for a short period of time. You have an impact on supply chains. You have a big impact on understanding the creditworthiness of your counterparties, because we see lots of liquidity in the banking sector, but we see less incentive to provide that without some form of support, whether it be from commercial or official export credit agencies. When we dig into the data, we see basically, cruise ships are down, large projects are down. Many of the beginning of 2020 were still going forward because they were well far into the pipeline of business. But as the year went on, the business really dried up. But if you go to the next slide, you'll see that the number of transactions hasn't changed that much. And this is because there still are a substantial number of what I would call the traditional trade flow, medium-term business that is continuing to go on. So all in all, it was a slightly down year, but still a fairly active one, all told. But if we were to look at short-term, which Mikhail Ron will get into with the Berne Union, you'll see, I think, a different story. When we look at the types of actions that were taken by the official ECAs with regard to the impact of COVID, what we found is that the majority were short-term related. We've done surveys of our members. You go to our website, you'll find a couple of short COVID briefs that we published on them. And we actually compared what they did to back what was done during the 08-09 financial crisis. And back then, there was a tremendous amount of provision of liquidity because the banks were going through a financial crisis. This time we saw far less related to liquidity, but far more related to working capital and even domestic support. So broadly speaking, we're seeing this shift, and it will be interesting to see how it plays out in 2021. We're expecting trade to grow by, some of the numbers I've seen are 8%, which means it will get back up above the pre-COVID era. And ECAs, I think, will be very active in this context. The question will be is how long does it take big projects to get back online? How long does it take for the shipping industry to need more vessels, especially the cruise industry and the aviation sector? So I think with that, that gives you sort of a snapshot of the official export credit business. And I will stop right there. Thank you.
Thank you, David. David, what's interesting to me in your numbers there that you're reporting was your observation that it was down, but you're thinking, at least from the growth rates you're seeing, that it will be back up to pre-COVID levels. Are you anticipating growth in any of the particular areas, or is that just overall?
I mean, I think I expect that the medium-term business, the cookie cutter business, the standard trade flows will improve because trade will be up. And obviously this is a question of demand because export credit agencies are demand driven. The question will be is how much is the private market get back into the game and to take some of that business that in effect doesn't need export official support. But the big ticket items are what drive the big numbers. So the projects, the aircraft, and the ships. And those are the three areas where it's the big unknown, because so much of the aircraft and ships that are done by official export credit agencies are related to tourism, and that is way down. And then with the large projects, it's a question of how long does it take to get the pipelines going again of those projects where they've been put on hold, and how soon do the project sponsors want to move forward on those, how quickly do the buyers want them in the line.
Okay, well, thank you, David. We will turn it over now to Michal Ron.
Yes, thank you very much, Isabel, for this invitation together with the whole team at the US EXIM. And I feel really honored and very grateful to participate in this important conference. As you mentioned before, I am the president of the Bern Union. My name is Michal Ron, and I'm also Chief International Officer at SACE, the Italian ECA. I'm going to use a few slides to illustrate some figures on the Bern Union business trends that we have witnessed during 2020. So we can move to the next slide. Some background context on our industry. The export credit world is evolving very rapidly, constantly adapting to the external environment, as well as also driving change from within in many different ways. So we have certainly seen extreme events such as economic, environmental, and social crisis. We have seen changes in regulations, as well as industry innovation, such as technological advances, digitalization process. These are all forces that shape our industry. And today I will provide an overview on the business volumes of the Bern Union members, also in the light of the extraordinary events of the past year. So next slide, slide 3. Last year was clearly a hugely challenging one, the effects of which I believe we will witness for many years to come. It won't be as fast a rebound, I believe, as the one from 2008. It struck us like a meteor, but the pandemic did hit suddenly, and it produced shockwaves, which effect has been felt by both the buyers, the exporters, insurers, and the financiers. And the result of prolonged lockdowns and logistic restrictions have been a very sharp, have led to a very sharp contraction in world trade. David mentioned 5, according to our economists, we're looking at global exports falling by 7.5% in 2020 compared to 2019. In any case, this is an important decrease. And as insurers, we feel the effects of this crisis directly, as well as through impact on our clients, because the pandemic adversely affected the cash flow of many of our clients' companies, also risking a domino effect of defaults across the industrial value chain. Clearly, we are in the business of risk, and therefore supporting trade in difficult environments is exactly what we do, especially if we consider the role of ECAs and their mandate. But even so, last year felt a little bit like playing a familiar game, but with radically new rules. Like I had this idea of a crazy new variation of the game Monopoly, where instead of go to jail card, you get go home and quarantine, or cargo port is closed, skip your turn. Every time you pass go, collect premium from a high-risk project, clearly if you're lucky. So I think you get the idea. If we move on to the next slide 4, moving on to the figures, we can see that despite the challenges, demand for export insurance products has remained strong and even very likely increased. So while the world trade is contracting and merchandise exports covered by the Bern-Union members actually increased by 2.4% to a total, staggering total of $2.5 trillion in 2020. So if we look at the graph on the right, we can actually see that the increase in business is entirely driven by short-term credit and domestic export that David also mentioned. The medium long-term credit has actually contracted quite significantly, and the PRI, the political risk insurance business, followed the trend of previous years, which is downwards. And this visible shift in the nature of our business is not only due to the pandemic, and I'd like to emphasize that, it is also the result of a longer-term, more structural change in the industry. So we can move to the next slide 5. And I want to focus a little bit more on these underlying trends according to this time the business lines. We spoke of the short-term export credit business, and it increased significantly by almost a third, 31% last year. Private insurers still account for the highest share of short-term credit insurance, but market gaps arising during the pandemic drove also an expansion in short-term support coming from the ECAs, who increased their share a little bit from 28 to 30% in 2020. Also, due to the temporary suspension of the European Union's short-term communication. This allowed effectively European ECAs to cover short-term marketable risks, namely those in OECD countries. At the very same time, the medium long-term business, as we already said, decreased quite a lot, 22% in 2020, mainly due to the crisis in the sectors mentioned previously. Those particularly affected by the pandemic were almost all in the transportation industries, more specifically the cruising boats and the aircraft sectors, which took the biggest hit. And the PRI business slightly declined by 17%. However, this remains in line with what we've seen. This is a trend we've seen for over 5 years now. Then a big mention to domestic support. This has seen really a huge shift. We're looking at an increase by 60% in 2020 and reached a really staggering $83 billion in new commitments. So this is also due to the fact that some ECAs enhanced what have been already existing international programs to compensate. This is to compensate for the decrease in the medium long-term business. Good examples of that are based in England, the UKEF, and NEXI, the ECA of Japan. Talking about domestic support in business, in business terms, what I mean by that is internationalization guarantees and working capital support that are related to export contracts. Other purely domestic instruments, meaning without a link to export or internationalization, were also introduced. These were done in response to the pandemic by only some governments. This is the case of Garanzia Italia program for SACE in Italy. But these, I want to highlight, are not included within the scope of the Bern Union reporting. Hence, these are left out of this current analysis and the graph you're looking at. Moving on to the next slide 6. Looking at the breakdown by business line for 2020. So I want to highlight that direct support of export credit, that's both short and medium and long term, amounted $2.4 trillion. Foreign investments and other cross-border credit was limited to $70 billion, and domestic support for exporters, as mentioned, reached a staggering $83 billion. Now, with respect to domestic support, which has been only recently included as a specific item in our Bern Union reporting, please do note that working capital and international guarantees mainly refer to the ECA business, whilst all the other products are also provided by the private insurers. A recent survey we conducted through our ECA committee revealed that many ECA members have introduced domestic programs even prior to the pandemic. So the increase in domestic business has been effectively a trend for several years now. But the crisis just led ECAs to introduce more flexible eligibility criteria for those programs and hence use them even more. And we can move to the next slide, which focuses on claims. And you might agree with me that the situation is not exactly what we would expect. On one hand, we have $8.8 billion that were paid out in claims by Bern Union members last year. And it is indeed the highest amount recorded for any one single year, 12% increase over the previous year. But on the other hand, we should note that all of this annual growth comes from a surge, a 44% surge in claims paid in the medium long-term credit business. And all of this is entirely due to indemnifications made by ECAs or by multilateral insurers. And many of these claims reported by our members cannot be attributed to the pandemic, but they are rather related to pre-existing defaults. So overall, we have a very mixed picture here. The claims paid in 2020 were certainly high, but not extremely so. And yet I am certain that we are most likely expecting to see further increases during the course of this year, which may be at least partially attributed this time around to the pandemic. And then we move to the last slide, 8. As far as the public policy institutions are concerned, the ultimate objective of ECAs, as you well know, is to promote and support the national industry and employment, all that through exports. And the way in which we can best achieve this goal changes according to the background in which we operate. In recent years, ECAs have adapted their business to better meet the role of filling in market gaps. And this led to diversification in terms of the types of clients, products, sources of financing, and policies. And when it comes to clients, many ECAs now have an explicit objective to build capacity for SMEs, for small, medium enterprises, and micro transactions. At the same time, continuing to support the large corporates in their respective core industries. At the product level, we can see changing approaches to the corporate supply chain and to inventory management. These are driving huge demand for working capital, also that mentioned before by David. At the same time, a more proactive strategy of export promotion has increased the internationalization support, with over $80 billion of new commitments to these products in 2020, representing as a category a 40% growth compared to the previous year. I personally believe this trend is set to continue also in years to come. And then we are reaching the sources of funding, and these are also shifting, with ECAs now playing a role in tapping, for instance, the capital markets, and many providing also direct lending where there is a market gap. Last but not least, with respect to policy, with very large, complex, multi-sourced projects becoming more and more the norm, many ECAs now take a more flexible approach to national content, to national interest, and many have a growing portfolio also of untied credit transactions, those transactions that are not correlated to any one commercial contract. I will conclude this part of my presentation by emphasizing that many aspects of these trends already commenced in the past and have been subsequently, if you want, expedited, accelerated by the pandemic as we adapt and adjust to reflect this rapidly changing environment.
Thank you, Mikal. That was a very comprehensive and insightful overview of the Berne Union trends. Maybe now I can ask you if you would switch hats, and in your role as Chief International Officer of SACE, maybe you could share with us how SACE is working in favor of Italy's national goals. We are always reading about SACE and the products that it's been introducing to be responsive to the demands of its market and in response to national goals. There's somewhat of a tension there, at least what we have found, to be bottom up, as David was explaining. ECAs are responsive and demand driven. The reporting we see at the OECD is specific to transactions that ECAs have concluded. However, we are often faced with national mandates that are top down. And so how SACE has reconciled this tension between the demand on the one hand, but also the objectives that you are trying to be responsive to in terms of national goals. Can you speak a little bit to that point?
Yeah, we have been actually selected by the Italian government to become a tool of support to liquidity, domestically speaking. So this is really the case with ECAs. I think I can only think of 2 ECAs that have actually been, if you want, recruited by their respective governments to provide liquidity. In the case of SACE, this has been conducted through Garanzia Italia, which is, a form of guarantee that is supported by the government balance sheet, by the Ministry of Finance. And that had effectively seen for us a major shift in our area of focus, as it is totally delinked from export in this specific case. And these were all, guarantees issued effectively in support of companies that were incurring difficulties during the pandemic, the worst part of the pandemic, and supported by the banking system, again, the domestic banking system. So it is an entirely domestic product where we play the role for really mid-cap and large corporates, and another separate financial institution was doing likewise, but with a focus on SMEs. The other ECA that has been doing similar things, but not exactly the same, is the Canadian EDC. In addition, again, maybe I'll start with EDC, that is now issuing green bonds and green loans. Again, it is a government product that they have been asked to be, if you want, the executors of that. SACE is doing the same with green guarantees. Again, a domestic focus aimed at facilitating, if you want, implementing the European Union's Green New Deal. And in addition to that, we see also some similar program, but done through direct lending at the UKEF side. So, you know, we had to both shift not only resources, a lot of time, managerial time, and all of this, especially the issuance of the Garanzia Italia, is conducted in parallel to our normal export-led activity with the same number of staff, but with the support, of course, of the Italian Ministry of Finance. So for us, it's been, you know, really a very significant shift in the operational focus. And if you want, almost doubling, if you want, the effort that, you know, we had to conduct. In part, the choice of SACE was also due to the fact that we had in place a very well-developed digital program that was already, if you want, experimented and implemented for at least a couple of years on most products. And we were already like 95% digitalized. So the shift from there to 98, 99%, it was very swift, and really overnight, we started to implement this guarantee program.
Thank you, Mikhail. I will now turn it over to David to ask him. We've heard Mikhail tell us about green bonds. She's referred to the Green New Deal. So there's certainly a great interest in this climate work across Bern Union members, and some ECAs like SACE playing leading roles. What can the OECD do to contribute to the ECA work in these and other priority areas? What are members focused on now, and what is your remit? David?
Well, you know, as I said earlier, ECAs are demand driven. So it really gets down to who's buying what. And when we look at the data over the last decade, you know, 30% of the medium long-term activity is for the fossil fuel industry. And that's largely driven by developing countries, which are, you know, having projects for their development, you know, energy needs and the like. And so the question has come up, how do you incentivize more green business, and how do you disincentivize brown business? And this is very difficult in a demand-driven business because fundamentally, if you want to incentivize, does that mean you're going to subsidize? And obviously, this is a very big issue being discussed in the G7, in the G20, in the WTO. It is, can green subsidies go forward, and are they okay in the context of WTO rules? When you look at actually the ECAs that are trying to do more, they have limited tools to the extent that they can change their content policy to do more non-national content. You know, they can speed up their processing and special handling. They can change their underwriting if they want to help get these deals forward. But if they want to do more generous terms, you get back to, you have to come to the OECD and negotiate with all the other members what you're going to do. So, and again, it's not the OECD who determines this. We're the forum for where the members come and they negotiate. So the participants of the arrangement are very actively engaged in discussions about incentives and disincentives. As you recall, back in 2015, we had an agreement on coal-fired sector business, and basically it put limits on support for coal-fired power plants. It was trying to incentivize using the best technology. The reality is that virtually no business was done under the arrangement for coal-fired power plants after that agreement. Some was done under other programs, whether it was aid or untied credits, but by and large, you're seeing so much of the financing community not wanting to do coal-fired power plants anymore, with the exception probably of China, which is continuing to do that. And of course, this raises competitive problems for some countries. If you sell that equipment, but you are competing against somebody with export credits and you don't have them, they may buy the other stuff. If it's easy to ban, it's easy to say, okay, I'm not going to do it anymore, but will everybody else agree to the same thing? So this is the ongoing discussion. There's also the issue, that we've been dealing with is modernization of the arrangement. As historically, the arrangement has been conservative, and that's because all the major players are around the table. And when you're all around the table and you're the only players in town, it's conservative. It's the only thing that's on offer for anybody. Well, now you have a lot of export credit agents from countries outside of the OECD who don't follow the rules because, well, they're not party to the rules. And it's not to say that they're doing radically different terms. It's just they have the flexibility to go a bit longer, a little more flexibility in the law, and maybe slightly different pricing. When you look at it from that context, if you modernize the arrangement into something that actually fits the economics of the projects of what the market would do for that type of a project, wherever you're building it, you might find that you will incentivize more projects to be done, especially in developing markets. But again, because it's demand driven, what we see is when it comes to green projects, the vast majority are being done in rich countries by the ECAs. And is that something that everybody wants? Because really, ideally, what you want is to get the developing countries to go green and to displace the fossil fuel mix. Again, it gets into the economics and what is in the best interest of those countries developing. And this is a very big debate that's ongoing. But our members are currently negotiating these issues, and we will see what they come up with. Thank you.
Thank you, David. I will turn it over to Mikhail also to ask her what Bern Union members have done and what programs they've introduced to help with this export promotion in this area and in other areas. How are your members coping?
Right, thank you for that question, because the climate change is a thing very close to my heart, and it is actually a pillar of the current Bern Union presidential platform. I really believe this is one of the most urgent challenges we are facing at the moment. And we have all seen and heard the recent tragic news of flooding, mudslides, drought, wildfires. And this has not been any region specific, it's been across the globe, and it seems to be getting worse. So the climate discussions that commenced at the Bern Union level already at least a couple of years ago, are taking now a turn of urgency. And this has definitely been acknowledged by the export credit, if you want, the export insurance industry, both at an individual ECA level and collectively by the Bern Union. In parallel, and I cannot overemphasize how important it is that this discussion is taking place also at the governmental level. Above all, I can mention governmental initiative, a recent one, and I'd like to see more of that happening because it incentivizes, it promotes this discussion also at the ECA level, is the initiative titled Export Finance for Future, where we saw 7 national governments in Europe, plus the UK, committed to ending some of the export credit support for coal power, David mentioned, and phasing out also support for fossil fuels. So in some instances, this political commitment has already been implemented in the internal policies, in the business practices of their respective ECAs. And this is the big point for us as an organization, as an industry. Not every country has an equally straightforward path to decarbonization. So as a consequence, ECA strategies towards climate vary very significantly. And the most significant difference in the current approach depends on the fact that some ECAs received a very specific mandate from their government to play an active role in the sustainable transition of the economy, whilst others act autonomously, that I could say, for instance, SACE in Italy, by introducing climate-related measures of or upon their own initiative. And not all ECAs can also count on a national industrial base that is active in green sectors, such as renewables. So this transition phase may require different types of effort and different pace. At the Bern Union level, I have observed the range of 4 different, if you want, categories for climate measures currently adapted by the industry. So we have the green evaluation methodologies, which could be either transaction-based or portfolio-based. And these are normally aimed at classifying transactions according to the impact on climate. And these methodologies, which are relatively new, have been so far implemented by few. I can give examples of Atradius, BPI France, and Euler Hermes. And then we look at other category of those targeted products with projects, or rather, aimed at projects which have a positive impact on climate. And this is like the case of the green guarantees mentioned before from EDC and SACE, and UKEF, UK, which has a dedicated budget of its direct lending program, dedicated especially for clean growth projects. And then we reach what David mentioned, the introduction of incentives. These are clearly aimed at improving the ECA exposure in sectors that have a positive impact. And they may include more favorable financial conditions, but what I believe would be more easy would be, supporting more flexible eligibility criteria and a somewhat less stringent risk appetite. I can think of, again, Atradius, BPI France, and also Euler Hermes as adopting these type of incentive measures. And then the last but not least is the category of bans, bans on support to projects with a negative impact on climate, such as we mentioned coal transactions, but also projects in oil and gas sector that utilize techniques that have a damaging impact on the environment, namely fracking or routine flaring. Some of these bans have already been introduced, but by few, BPI, SACE, EDC, Euler Hermes, UKEF. This is just a few examples, but effectively the most restrictive bans always follow a specific government policy. And this has been the case in the UK, in Sweden with EKN, and in France with BPI France. All these 3 have introduced bans on fossil fuel projects. So basically, we see that in this climate field area, there is a need for shared solutions, and the debate is going on, as David mentioned, because common challenges require shared solutions. And just as in any other multilateral initiative, we have the same nature of difficulties like competing systems, competing exporters, different regulation frameworks, mentioned OECD versus non-OECD, and a complete mix of commercial and political, complex mix of political and commercial interests. In terms of the specific initiatives at the Bern Union, we are encouraging and promoting sharing of knowledge, comparing different approaches and learning from industry peers. And during the past year, the Bern Union went ahead with a few initiatives, specifically providing an overview with specific concrete examples of the more virtuous operators in the field, to give an idea and also to be copied, why not, by those who are, somewhat left behind. Outreach initiatives has also been a very strong part of our efforts, where we have seen the Bern Union strengthening dialogue with other stakeholders, such as the DFIs, the multilateral development banks, and all this in order to identify together potential synergies and areas of cooperation. This is specifically the case of the Outreach Task Force and the Capacity Sharing Marketplace. This is a network, for those of you who do not know, for an information exchange, including ECAs, private insurers, multilaterals, DFIs, and a very clear example of how a multilateral approach involving different types of institutions can work together in identifying practical responses to a common global problem. I still think that at the political level, which is extremely important, we have learned the lessons from the IWG, the G20, that includes both the OECD and the non-OECD countries, definitely represents one of the more adequate forum for climate strategies within our business, the export credit business, because the role of this forum in response to climate change is becoming increasingly relevant. And I do believe that climate change is an issue that unites us, in such a powerful manner, and as such has all the premises to become a catalyst for progress in cooperation through initiatives across the globe.
Thank you, Mikkel. Shared solutions indeed. I will certainly make note of that and carry that into the live Q&A. We would like to make sure you tune in to the live Q&A. We will welcome TXF to join us and kick off what we hope is a robust discussion with you, our audience. Thank you both for sharing your insights, and we look forward to the audience participation in the Q&A.